Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum. Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you back with us here at Ausbiz as we get this new week underway. Let's begin though by looking back what we saw on Friday. Global stocks trading near record highs. That was ahead of talks between President Trump and Russian President Vladimir Putin, which took place on Saturday morning our time. European shares they did rise before pulling back, with investors encouraged by positive earnings results, they're saying there. Now on Wall Street, the Dow ended higher after hitting an intraday record. The S&P and NASDAQ slipping as mixed data clouded the Fed Reserve's next policy move. And quick look at the Mag 7. Not a lot of movement among the mega caps there, with Meta and Alphabet managing some modest gains. Intel shares, they surged on a report that the Trump administration is in talks for the US government to potentially take a stake in the chip maker, whereas Applied Materials tumbled after the chip equipment maker issued weak fourth quarter forecasts. And UnitedHealth rose sharply after Warren Buffett's company Berkshire Hathaway revealed a new investment in the health insurer, whereas shares of Bank of America fell after Berkshire Hathaway reduced its stake in the bank by about 4%. Well, President Trump has called his meeting with President Vladimir Putin extremely productive, but indicated that a deal to end the war in Ukraine had still not been finalised. European leaders will join Ukraine's President Vladimir Zelensky at a meeting with President Trump in Washington on Monday. Meanwhile, Donald Trump has said he will announce more tariffs in the coming week, saying, "I'll be setting tariffs next week and the week after on steel, and I would say on chips." Well, investors this week will be watching Jackson Hole, Wyoming, where Federal Reserve policymakers gather for their annual policy symposium in a search for clues on the path of interest rates. The futures market's still expecting the Fed to cut rates by a quarter percentage point, at least twice more this year. And in the latest economic data, US retail sales in July rose 0.5%. That was a slight miss, while consumer sentiment fell, inflation expectations rising to 3.9%. US Treasuries, they rose slightly on Friday. The US 2-year at 3.75%, the 10-year at 4.3%. And the US dollar slipped. The Aussie dollar is currently at 65.1 US cents. Bitcoin trading just shy of 118,000 US dollars. And in terms of commodities, oil prices falling on Friday ahead of that Trump-Putin talk, with the prospect of a possible easing of sanctions imposed on Russia over the war in Ukraine. Brent crude futures 1.5% lower at $65 a barrel. Copper was up modestly. Iron ore little change at $101 US dollars a tonne, and gold held steady at around $3,334 an ounce. Let's get across what we're seeing on global markets with a focus on Wall Street. Greg Boland joining us again from Tiger Brokers. Greg, happy Monday to you as we get going. Certainly there's a focus locally here in Australia. We're halfway through earnings season. Just coming to the tail end of earnings season stateside. But let's start with what we're seeing at an equity level on Wall Street at the moment. More records there, particularly from the Dow.
Yes, the Dow and the Russell were the big gainers last week. The Dow pushed higher mainly by UnitedHealth Group, whereby Warren Buffett's Berkshire Hathaway has taken a stake in the company. So every 45 days after the end of each quarter, all the fund managers with more than 100 billion under management have to report, 100 million under management have to report what they hold. And there was an increased holdings in UnitedHealth by Berkshire Hathaway, and that pushed the stock higher on that sentiment, up around 12% last week.
Yeah, interesting. I just mentioned there, obviously taking that stake in UnitedHealth, but selling out, well, not completely, but selling down, I should say, on Bank of America.
Yes, Bank of America and also Apple have been reduced in their holdings over time. So it's definitely a move away from those two stocks a little bit, but they're still the biggest shareholder of Apple and one of the biggest shareholders of Bank of America. So it's just a rebalancing act more than anything else. But the biggest issue they've got is a huge amount of cash they still sit on, which is obviously in US Treasuries, and therefore where do they put that money will be the interesting focus over this next quarter.
Indeed. Now, Greg, the focus remains on those mega cap tech stocks, which have been driving the market more broadly, that narrow leadership at play again. Rather than focus on those Mag 7, you tend to focus on the so-called Batman stocks. What are you seeing there at the moment?
Well, the Batman one. So the Mag 7 plus Broadcom is the Batman stocks. Interesting, though, that Barron's last week sort of came up with another term, maybe it's for this half of the year, called the Fab Four, which is Nvidia, Microsoft, Meta, and Broadcom. Those four stocks account for 21% of the index, of the S&P 500 index, and have contributed more than 60% of the index's gains so far in 2025. Nvidia by itself is over a quarter of the gains of the index, contributing around 27%. So the Batman stocks, you could have sort of moved away a little bit from that to now the Fab Four, because those four are doing particularly well. In the middle of the pack, still Alphabet and Amazon, and sort of up around 5%, and then Tesla and Apple are still down year to date. Tesla down 18% and Apple down 7.5%. So a shift from the top 8 maybe to a top 4, and those four still they have done particularly well this year so far.
Now, Greg, as I mentioned there, sort of at the tail end of earnings season. It does go on in the States, doesn't it? Fairly protracted. But, I mean, the focus this week will be very much the retailers, and I guess we'll get a good sense perhaps of what's going on in the underlying economy.
Yes, I think that's a really good barometer, the big box retailers versus the online ones like Amazon, which reported a couple of weeks ago. So you've got Walmart, Target, Home Depot, and Lowe's all reporting, and it'll be a really interesting reporting from these companies. It's not only just the results, which is a look in the rear view mirror, but looking out the windscreen ahead. What are their forecasts? And definitely so far this earnings season, anything that has reported well and has good guidance has done reasonably well. In the past, they would have done exceptionally well. So and then any stocks that may be sort of reporting around where expectations are or slightly below are getting hammered. So it'll be interesting to see what their forecasts particularly are for the next quarter.
Now, Greg, we've also got data out of the States, housing starts, building permits. What are we seeing with that related sector?
Well, definitely the building sector and the home sector has been pretty tough market in the US and New Zealand and Australia and the like. So right around the world, housing has been in a slump for quite some time. So it'll be interesting to see what the numbers this week are for building starts and permits, which comes out on Wednesday, and existing home sales on Friday. The real estate sector last Friday did particularly well, up the second best performer. But when you look at individual stocks in the top 10 by market cap, most of the home builders this year have returned somewhere between 14 and 48%, which is a pretty huge number that's just in this quarter. So since the beginning of July. So it's definitely been a shift, maybe from some of the tech stocks and the like to maybe home builders now, which is interesting to see that sector finally moving after being in a slump for so long.
Now, Greg, at a macro level, the focus very much this week will be on Jackson Hole in Wyoming, where you've got the Fed symposium there. What are the expectations from this symposium?
I think it'll be interesting to particularly what Jerome Powell says on Friday the 22nd, their time. So it'll be interesting to see what he says. And the other interesting thing this week as well regarding the Fed is on Wednesday, where the Fed minutes come out, and definitely when there was dissent last time in the meeting where two Fed governors would have preferred a 50 point change in rates and the rest for 25 points. Interesting to see what the rhetoric was around that meeting. So two big things for the Fed this week: the Jackson Hole starting on Thursday, their Thursday, our Friday, and also Jerome's speech their Friday, our Saturday.
All right, and just returning to what we're seeing on the equity market, I might have brought this up last time, but I mean, you clearly are aware of that seasonality that tends to be at play, particularly in the third quarter, with that weakness that tends to emerge August, particularly in September.
Yes, particularly September. The third quarter has always been the weakest. When you look back at data from there's data on the ASX back to 1936. And data back longer, but when you look from the Second World War, the return for September is the only negative month. I think this time it may not be the case, but time will tell, obviously. And because we had that major pullback earlier in the year, and the NASDAQ so far this quarter is up 6.2%, and the S&P 500 up 4%, the Dow up 2%. That's just quarter to date, so reasonable returns. The other things, if you look at technicals, like the index itself is very bullish. There's a lot of support at 6,400, 6,200 and 6,150. We're getting towards 6,500, which will be interesting to see whether we break through that over this coming week or so. The VIX is very low, back around 15 or so, which is good, but the only negative indicator really is the equity only put call ratio, which is elevated at the moment, which could be deemed to be bearish. However, it could be a signal that investors and traders are trying to buy protective put options in this latest bull run.
Greg, great to get your outlook of what we're seeing, particularly on Wall Street. Thanks for joining us in Tiger Brokers. Have a great week.
Thank you, and you too. Thank you.
All right, let's refocus then on the local market just before we get going. And we are expecting a negative start there. SPI futures down 0.6%. Clearly today, the focus remains on earnings. This is the busiest week on the calendar. And we're going to get across all those results when we get going in just a minute or two. Stay with us for the open.